Okay, so here is gold. This is a monthly chart here on the right, and that's a lovely bullish trend. And with the start of the new month, the start of a new month will bring new money with a new plan into the market. So far, the plan looks to be buying gold, continue to buy gold, to break fresh highs. Okay, we've had a period of consolidation, sort of sideways price action over the last few months, which could have gone either way. And it just so happens that we've broken to the upside. It could have gone down. No easy way to have known which way this was going to go. However, if you look at last month, look at the value area of that month. Okay, the price closed firmly outside of its value area to the upside. The previous 2 months, you could hardly say it was a firm close below the value area. It was a small bodied candle. And the same could be said for the previous month. But this month here closed firmly to the upside, taking out the last month's highs and way above last month's value area high, way above the previous month's value area high, and a firm bullish close. The new money with a new plan came in and took the price even higher, in line with the bullish trend. And we're wondering whether we should sell gold. Well, why would we sell gold now? What's the reason behind that? Just because it's at all-time highs? Is that a reason to sell gold? Probably not. You're getting in the way of a steam train. Now, with that being said, let's look at the current situation on a lower time frame chart and look for reasons how we might be able to sell gold. Well, first of all, we had a very strong move out of New York, very wide move compared to previous sessions. So in the grand scheme of things, that was a very big move. We had a similarly big move over here. What day was that? Last Friday. Okay. And then we got a correction. But did it correct? How far did it correct? Not very far. And we got another almighty move out of Asia. Okay, so traders that were thinking, oh, well, this is all-time highs, let's sell it. Well, they got caught out. So you don't just sell because it's at all-time highs or at a hunt. You've got a hunch that it's got to pull back or it's the high of the week. What we can do instead is we can look for confirmation. So this is why I use the TrendPredator Pro. It's telling me we've got 3L, 3 months of longs in the market, which in itself is a market that is potentially overextended. But when we look at the chart as we just did a moment ago, let's look at that. It's not 3 months of continuous steep rise, is it? It's 3 months that have, I mean, this here was an inside month, right? So we don't count that. So this was an inside month. This one here, inside of the previous month's high and low. But that previous month was a bullish close. So bullish close, inside bullish close, and we're breaking out of those highs. So we have 3 months of breaking out of previous month's highs. Okay, fine. We've got an inside month, and there's a couple of ways that could work. So we break out of the inside month highs and pull back. That's one prospect, and then we come back to the other side of the month. Or we break out, maybe retest, and stay out. Okay, so there are scenarios where we can break out of that month and retest it. In this case, what we did is we closed. We didn't take out the lows, so there are definitely prospects of a move below that month's low. But at the moment, there's little sign that we're coming back to the other side of the range. At the moment, what we did is we closed, and then we opened, and we moved up. And then we moved up again so far this month. So it looks as though we're going to stay outside of this month's inside month range to the upside. So that's a factor to take into consideration. But that's not to say that we won't come back for a retest of the inside month's highs. So let's look at the previous month. So there's the inside month. Okay, so let's bring that down. Let's bring it down to the inside month's highs. So this month here opened, and all it's done is rallied and smashed through those highs. Literally without looking back, I don't think. We might have a little retest here. Yes, we did on, what day was that? Oh, start of the week. Okay. Start the week, start the month, we retested the highs of that previous month's high, and we just took off, and we haven't looked back really, have we? Now, what I would look to do if we have an inkling that we're coming back to those highs is I would wait for what I'd really like to see would be a bullish close this week. So we'll have 1 week and then 2 weeks of rise. And then in the third week, maybe that's when the market will start exhausting. We'll have 3L monthly, 3L weekly, and potentially 3L on the daily chart, 3L on the 8-hour chart. And that's when you've got a market that's starting to break down once you get the fake out highs. So in other words, this week can keep going, let's say, and then we get a new week. So that's Friday. And then we get a new week over here somewhere. Hold on, there we go. Okay. And let's say we put in a fresh high, all-time high, right? And then we start to decelerate. And then we're selling at some point in that week into what is a very overextended market. At the moment, it's pretty overextended because we've got 3L on the daily chart, but maybe it's not overextended enough. So that could be a scenario where we look to sell, and we would only be looking to sell when we get a fake out high on the daily and 8-hour chart. And what do I mean by that? So currently we are above yesterday's highs. If the market comes back inside yesterday's highs, then we've got a fake out high on the day itself. And because New York put in the high, we'll also have a fake out high on the 8-hour chart, the sessions chart. This is the session here. Okay, it was a bullish session. We'll give it a bullish color, but we'll give it an outline color coordinated with the TrendPredator signals, 8H. So that was the London session in here. Okay, and these sessions resulted in a bullish close on the day. There's the high. Now look, here we've got it now. Look, just as we're speaking. So what's the price doing? Look what it's doing. It's breaking in below yesterday's highs and the New York highs. So we've got FOH on the daily chart, FOH on the 8-hour chart into 3 days of longs. Therefore, we get a 1-star quality reversal, fake out high counter trend from the high of the day, and that is a feasible trade setup to be looking for a short into the rally. However, for me, what I prefer is the price to be below the 20 EMA, below the New York VWAP, which is all the way down here at the moment. That's the close at least. And below the Tokyo VWAP. And Tokyo hasn't even opened yet, so I'm not even interested to trade this until we get volume coming into the market at 9. No, it will be 8. 888. And we're waiting for 3 more minutes. Let's go to my Asian template. In fact, all right, here we go. So if we look at gold, okay, so what we're waiting for now is a couple more minutes, and we will have a Asian range between the here and here. This will be the opening range of Tokyo. And what I'll be looking for is, rather than trading inside of the range, I'd rather trade outside of the range, below the range, potentially from the closing price inside of the range, to look for a short. But at what are we going to be targeting at this point then? So we could target maybe the closes of the VWAPs, the previous day low, the session open from, that would be London perhaps. Or we just simply wait for this to play out in 30 seconds time, and we're looking for a 100% range expansion of this box, something like that, round about. Target 1, and then the same again, target 2. As a 200% range expansion, we'll get that in a moment. The indicator is going to show us where it is. There it is there. 200% range expansion, a 100% range expansion. downside. Maybe below the box. So there's the opening range box. Taking it on a breakout, a 15-minute close, perhaps below the box. Perhaps a 15-minute close, pull back and retest, failure, fake out highs on the 5-minute chart and reversal or continuation of the fake out high on the day. But don't forget, everybody and their auntie is going to be trying to do the same thing, selling the high, the all-time highs, and it can be a trap. So I trade it with minimal risk. You can roll the dice and see what happens, but I would not be betting my house on this type of setup. What I prefer to see is 3L on the 8 hour. Okay, which we had before the market broke back above the high. So we must have this price fake out high on the day, fake out high on the 8 hour, 3L on the 8H, and then we have a 1-star quality setup to be looking for a short. Because what we're doing is we're letting the market break down the highs of New York, just like it's trying to do here. Fake out high on the daily, fake out high on the 8H, but we do not have 3L on the 8H. Why? Because we've only had one session of breakout. Hence why this is a 1-star quality setup. If, on the other hand, we get New York that broke London's highs, and then we have Asia breaking New York's highs, and let's say it closes like this. And then in London, we break Asia's highs and then come back inside. Then we've got 1 breakout, 2 breakouts, and New York breaking out of London, 3 breakouts. Then we've got 3L on the AH as well. And if we get below yesterday's highs in London from all the way up here, then you've got a market that's breaking down. We're not trying to sell the high. Don't know what's happened there. We're not trying to sell the high of the day. We're letting the market break down and we're catching it lower down as the market breaks down. So this then gives us a resistance area, trap traders high up at all-time highs, buying the market thinking it's going higher, but then the bears have taken control and they've shown that they are in control, and we're just simply taking a segment out of their efforts down here somewhere. Instead of trying to pick the highs of the market, we're just letting the market break down systematically over time frames. So we have a multi-time frame bearish bias, and then that would raise what was a 1-star bearish setup a moment ago. I mean, the price is back above these highs now, so we've got actually a bullish setup. But if it gets back below that daily high, well, as it's done now, it's a 1-star quality. But if it takes out 3L on the AH, so London pumps and then breaks below Asia's highs, then we'll have 3L on the AH and on the day, and a fake out high on the day because it will be below yesterday's highs. Then we'll have a 2 star quality setup, and I'll be more comfortable trading a higher quality setup because it has more conviction and more probability that you'll have a positive outcome because you're trading with a trend that's already built up momentum, and you're trading with the momentum. This hasn't got momentum. It keeps flipping from bearish to bullish, bearish to bullish. Down here, it's not going to do that. It's just going to be bearish, 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 bearish. Okay, so I hope that makes sense. It was quite a lengthy video, but I think one well deserved and something that you can carry along with you for your trading career. Do not try and pick the top or bottom. Wait for the market to break down systematically across multiple time frames.